Hello and welcome to another update video about ADA. ADA has pulled back yesterday a little bit further, has corrected and tested our support area. So basically the, let's say, target for this correction has already been reached. I mean, corrections don't really have targets, but it's still good to see if those landmarks, those support zones are tested in corrections, in pullbacks, because they give us further confirmation of the wave count. I'm going to zoom in a minute, take a look at that. But first of all, let's take a look at the structure. And I notice that for some reason, no, it's all good. Okay, all good. All good. No, I just missed that up there. Okay, so yeah, let's talk about the structure first. And we want to start on the 4-hour chart. Here, this is still an unchanged structure, same structure that we've been tracking for months. So the analysis has been very consistent about ADA. Still looking at a diagonal pattern here to the upside, which is developing. We have a wave 1 to the upside, which topped in July. A wave 2 pullback, which bottomed in September. A wave 3 rally, which topped in December. A wave 4 pullback, which likely bottomed in January. Okay, wave 4 could still be unfolding, but I need to see certain micro support levels break, specifically the one at 52.9 cents, to confirm that. All right, until then, the assumption would be a wave 4 is already in, and that just has to do with the subwave structure that's developing here that we're taking a look at in a minute. But overall, okay, if we say, okay, the low is already in this wave 4, then wave 5 would be unfolding right now to 85 to 96 cents next. So that's sort of what I'm tracking, 85 to 96 cents next in this fifth wave, yeah, to the upside after we had a wave 1, a wave 2, a wave 3, a wave 4, and now the fifth wave. How exactly it's going to get there is a bit difficult to say because we're dealing with a larger diagonal pattern. So please don't, please don't expect absolute precision because this is only possible in impulsive structures. We don't have any impulse here at all. And please be a bit open to, let's say different wave counts or deeper pullbacks and, quick changes in the microstructure, even though that's not needed at the moment. Looking then at the short term, really the 1-hour chart, we can see that, okay, if wave 4 bottomed here on the 23rd of January in our support zone, then we could now be in this fifth wave to the upside, which again consists of a wave 1 to the upside, which topped on the 30th or 31st. Wave 2 followed then. Wave 3 topped at the 1.618 extension, ideal target for a third wave. When we reach the first ideal target, so there are obviously minimum targets, ideal, extended targets, but the 1.618 is one of the ideal targets for a third wave. So highlighted, if we get to these ideal targets, I'm going to add a support area for a wave 4 pullback because we're looking for a 5-wave pattern to confirm that a top is in place. Yeah? And at the moment you can see we only have 3, so it could also be the white count with this X wave top, which would result in a Y wave down. But because we have reached ideal targets for a third wave, which could also be an X wave, but at least we can keep the yellow count alive and the larger trend is up. So I give it the benefit of the doubt. I've added a support area then that we can track. And I'm highlighting, as long as we're holding that micro support, I don't need to change the wave count or assumption or anything. I just go with the trend. And that support zone is defined between 56.9 cents and 52.9. And if we zoom in further, then you'll see that this has now been tested. So we have here probably a WXY complex correction. Yes, other interpretations are surely possible. But if we have the W and X, then we're now in the Y wave. The Y wave is an A, B, C structure. And the first line of support was already tested yesterday and a nice reaction to it. Since then, it's not made another low, but I also don't have any evidence that a low is in place yet, even though there was a nice reaction to the 38.2 retracement. I wouldn't be surprised if it tests the lower boundary line of this ascending trend channel. Break above the B wave high is now needed at 60.8 cents to suggest that the fifth wave to the upside has started. That would be the earliest indication we can get that this fifth wave to the upside has started, which might then reach 66.1 or even 68.8 cents. So basically what we're watching for is, okay, maybe it's going to test one of the lower support levels or the lower boundary line, but a break above that B wave high could suggest that the fifth wave has started. As soon as we have these 5 waves, I can add another support area to the chart, because we would then expect another correction, but a higher low, and then go from there. Okay, that's my update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.